Welcome to CEO Insights. I'm Marilyn de Guzman with INN. I'm speaking with Guillermo Pensado, VP of Exploration and Development with Blue Sky Uranium. Hi, Guillermo.
Hi, nice to be at PDAC again, like every year. Good moment.
Let's talk about the recent news that your company has released, and that's the preliminary economic assessment for the Ivana deposit. Could you talk a bit more about the highlights of that PEA and why it's important?
Okay, the first thing that we wanted to prove that is after the inflation and the changes in the market, in the uranium market particularly, that how Ivana was improved in the last PEA before COVID-19. So many things changing. So we had to prove that how it looks this project from the economic point of view, and we knew that it could be improved. But although we have inflation, we have better market condition and some better deposit condition, because in between we were doing some infill, because the other strategy was trying to improve the category of the resources, going from inferring into indicating, de-risking the project from the mineral resource point of view. So that was the 2 points that we wanted to show, that the economics are still good. In fact, they are better, much better. And we de-risk the resources. And now, 80% of the resources at the Ivana area are indicated now, before we 100% infer it. And if we see the mining plan prospective at the PEA, more than 80% is indicated. The other good thing is that we could find that due to the infill, we found some good results in the core zone. So in the economics, finally impact that the first few years of production, you have better grades. So you have a payback faster than expected. We also wanted to prove that we are still, although with higher values on the operating cost, but we are still in the very lower level on the operating cost compared to the actual market. So if you see today, the overall operating cost cash cost is 23 and something per pound. At the market, which actually is about $100, and the PEA is prepared at $75 per pound as long-term price prospected. And if you see all included with the sustainable and the credits, it's 25. So we are still a very profitable project. So this is the first thing that we wanted to show. Why we wanted to do this? Because we are preparing the Ivana deposit to the PFS. And now the market is indicating to us that it's the right time to accelerate the speed into this process, because the market is going up. And if we have, we need a PF that probably may take 1 year, because it's not, it's very straightforward project. And after that, a decision point, if you go into production, that with permits and so on, could be other 2 years. So we find that it's the right moment to accelerate that process. We need the financing to do all this process. So, we wanted to show to the actual shareholders and the potential investors in the project that how good are the economics today and where we could be in this upside market. We could probably take advantage of this market very rapidly in these industry terms, in 3 or 4 years from now. So that was the strategy for the PEA.
And you're referring to obviously the, soaring prices of uranium that's been happening recently, which has been a good positive for, for the uranium sector.
But it's not only the good prices today, it's also that the uranium market changed in the last few years. And previous PEA, I remember because we wrote in the PEA that, the spot price had a minor impact in the general market. In the last few years, with the uranium shortage, with the lower production from several production centers or the care maintenance stage of some of those mines. I mean, the market is started to show new market condition, and the long-term contract that this sector used to use, now they were reduced several years, and most of those contracts are mainly focusing buying uranium, but not fixed price. So some of those new contracts are using, in their terms, potential future spot price. So now the spot price start to have more influence into this market. So all those change. So we expected for this PEA, or we use it the long-term price of $75 per pound, but we are seeing that how though these higher prices are more sustainable than it was in the past due to these changes in the market. So this is something that we need to take advantage of those conditions, and this is what we are doing.
So the Ivana deposit is part of the Amarillo Grande project. Could you talk about the short and long?
Okay, the short is what we are talking. Since the beginning, we started all of this when the uranium price was $20 per pound. And in a huge district, more than 140 kilometers long by 30, 40 kilometers wide, huge area to be prospective, new area that always, when you start to work in a new area, you have a learning curve to walk along, and you know that the first year you are going to be some frustration due to that until you understand the model. Ivana helped us different things. The strategy was, first, to specify the type of deposit that we were looking at that district. And if a small, unique, or single deposit could be economic by itself. And at what price? Because the mineralization is from surface down to 25 meters, and in poor consolidated or unconsolidated sediments. So finally, we are talking about a sand quarry where you produce uranium, so very low operating potential. So we had to prove and show to the investors that what is the potentiality of the district. And this is what we achieved very rapidly with Ivana deposit. But we still know, after more than 15 years of exploration of the district, how many targets we still have. So the strategy is, okay, Ivana deposit is a 11, 12-year estimated production, economic, profitable, but this is the starting point for the entire district that could be providing mineral into a central facility in Ivana. And because the mineralization in this type of deposit, that they are near surface, is in the, as I mentioned, poor consolidated sediment, you can do economic some minor deposit that could be alone sub-economics. But if you can pre-concentrate, as we prove it for Ivana deposit, you can pre-concentrate on site and go into more economic grade, move into the plant, that start to create a long-term strategy. It's like extending the life of the mine. So it's like we are focused now, and with this new market condition, in trying to move this rapidly, but at the same time, we continue the exploration of targets initially in an area of 20, 30 kilometers around Ivana deposit, trying to define mineralization that we know from surface, trying to define another potentially economic deposit near by the Ivana deposit. And still we have other 80 kilometers long district to explore. But I mean, this is for a long time. If you compare this with huge districts, because this kind of deposit in sediments, in general, they're related to big basins and take time to explore. If you see Kazakhstan today, the first producer, I mean, they were exploring for 50 years now. And now they show all the entire potentiality. And this is part of the learning curve. And this is something that in Ivana, we are just beginning with the first discovery, and we expect to define more deposit because we already know target that they could be potentially becoming a new deposit or geological condition that could be provided new deposit. So we are playing the two games. The short, trying to move Ivana into a potentially near medium-term production, and the chances to extend the mine life of the Ivana deposit with a satellite deposit nearby that you can extend the mine life, like doing the deposit and the brownfield at the same time.
Man, it's multi-generational project. What are some of the upcoming catalysts, and what are the next steps for the project?
PFS, the pre-feasibility study. I mean, now we presented the PEA. We were working the last year in a new processing study that was delayed more than expected, I should say. So finally was not included this PEA because we wanted to show at least the economic term now, but we expect to be finalizing those terms with our coming. I mean, they looks good, and we want to show those results for the pre-feasibility study, trying to have all the resources into indicated and measure it, probably some of those, trying to de-risk the entire project. So we go into the PFS as long as we can in the PFS, as close to the feasibility study as possible. And you say, okay, why you are going to do all of that? Because for example, the infill drilling, in general, we are talking about, by now we have 848 holes. But if you see that, those are a lot of number of holes. But if you see the amount of meter drilled, they represent 11,000. Because the average depth is only 15 meters. So it's very, I mean, from the operational cost, I mean, it's very easy to move forward into that case. So if we can de-risk the project in a very good way without spending so much money doing that, let's do it now. Let's try to de-risk the project as much as possible. I mean, the market always, need to help the risk balance, investment and risks, and we are trying to help to our shareholders and investors. Okay, if you are coming to this market, we are trying to help you as much as we can in each stage, de-risking the project, as usual. I mean, this is usually happen. But in this case in particular, we can do probably more than common. Let's do it. If it doesn't cost much, let's do it. It's going to be a support for the investors.
Right. Yeah, so you've outlined a lot of great points about the project and what you're doing right now. So we're here, obviously, we're at PDAC. If you could summarize for an investor why Blue Sky Uranium is a compelling investment opportunity at this time, what do you say to that?
Well, for all of this, I mean, there are no much projects in the world that you can say, okay, we are near medium-term potential production mines. We are in a country which is a nuclear country that not many people know. Argentina is a well-recognized worldwide nuclear country. In fact, the general manager of the International Atomic Energy Agency is an Argentinian. He was re-elected recently. And Argentina has 3 nuclear reactors, but we have not been producing uranium since 25 years ago. And Argentina needs to recuperate the self-supply of uranium because they also have the capacity to produce nuclear fuel, so do the next stages in the nuclear cycle. But we are buying yellowcake, the concentrate from Kazakhstan, from Canada, so where we could be recuperating that. So this is a good point to do it. The world understood the importance of the nuclear sector for the energy transition. The nuclear sector used to say in the past that the goal would be 20% of the energy should be nuclear. Today it's about 10% in the world. And recently, the last COP28, they moved up. We were conservative in our number. They say, no, it should be 30. So, okay. So we need to define more uranium resources, and so it's a good point to be investing in a very profitable PA stage target but with capacity to rapidly move forward. It's a very easy and straightforward type of deposit on surface. No drilling, blasting, or crushing, for example, for the mine. Very low potential operating cost. So this is a good point. It's a unique project as Ivana, the deposit only. But if you see the exploration potential for the strategy in the long term, I mean, the potential could be, for extend the mine life, as happened in many cases, in many districts, in different commodities, you can extend the mine life for many, many years. And this is the strategy from the near term and the long term.
All right. Well, thanks again, Guillermo, for sharing your company's update and for taking the time today. Thank you. And thanks, everyone, for watching. Join us again next time for another engaging conversation on CEO Insights. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. See you next time.